All right. So I'm going to be kind of going over the price action on Tesla, what I thought, why this move occurred so explosively to the upside, and the trade I took, and just all of that jazz. So here we're going to start on the weekly, as most of your analysis should come from there. Because you always want to gauge the higher time frame. If you are trading in the direction of the higher time frame order flow, your win rate is going to go up rather than if you are trying to pick tops and bottoms all the time. It's just not ideal. So, here on the weekly, we can see we get this move down. We're sweeping all this sell side liquidity, and then we got the bottom move up into the BPR and got an aggressive move higher. So then here we've been balancing. We come down, take out sell side liquidity. We hit the weekly breaker, weekly volume imbalance here, and we have started the buy side of the curve back up. I personally do think we are on the way to 315 and these highs up through here, but I really need to see us through this 252, and I'd be confident to hold my couple months out calls through these highs. But so if we don't end up breaking through this level within, I'd say a week or two, I'd look to get out my position, but I'm sitting pretty risk free now, and I'll share that soon. So let me move down to the 1 hour. So I'm sure most of you know we have been in a pretty brutal sideways consolidation on Tesla, but then we just all of a sudden get the explosive move to the upside. So why did this happen? So I hope this is going to help because I'm going to try and explain it to the most simplest form. So, here in this consolidation, when we are building up all of these lows in here, this is the market inducing buyers into the market because they are seeing big support building in here. So they see all of these wicks down through here. They're like, oh, this is big support. I'm going to buy and put my stop loss below this low. So all of these sell stops are sitting below this low. Everyone that's going long. So we see that happen. So we're wanting to see a move down into these lows because we have a weekly FVG right below these lows. So here's our higher time frame PD array. Here is our liquidity pool. So before they take it down into this liquidity pool, they induce sellers into the market by leaving equal highs and these failed swing highs. So now they're building up so called resistance, and people are going short and putting their stop losses above the high. So they take the market down. And right here, when they take it down through these lows, they're taking all of those buyers out of the market. They're taking all of their stop losses. All of those buyers are getting swept out of the market. And while that's happening, they're tripping more sellers into the market because they're breaking the so called support. So people are going short off of us breaking support. Um, as well as people that are trading the trend lines. We break below this trend line here, so they are going short off of that. As well as, let me go to the daily real quick because I had seen people posting on Twitter a head and shoulders. So you can see the shoulder, the head, and then they were talking about this was the right shoulder. So they were wanting to see breaks down here. So I already had a little bit of sentiment in the back of my head of what your average retail trader was thinking. So moving back down to the 1 hour. So they're tripping more sellers into the market as they're taking buyers out of the market. So when they're taking all of these buyers out of the market, that is when you're going to see an explosive move to the upside because they won't want to let those buyers get back into the market. That's why you don't see any dips here. The only dip was right here, and it wasn't while the market was open. It was before the market even opened, and then continued the aggressive delivery to the upside. So, what else fueled that? Well, we have the equal highs up here from everyone that went short. So the market took out all the buyers, and now it's moving aggressively to take out the people that went short. All of these sellers are selling for a loss, fueling it even more to the upside. And another thing is the failed swing highs. This is what engineers up all of the liquidity for a low resistance liquidity run like this when it's just one delivery to the upside. So we have a high, a low, a high. We fail to take the high. Low, high, failed to take it. Low, high, failed to take it. Low, high, low, high, low, high. You get the point. We're failing to take highs, so we just keep taking sell side liquidity, sell side liquidity, sell side liquidity. So whenever we do get that run for buy side liquidity, it's going to be an aggressive and explosive move like this. So we sweep out sell side, we hit our higher time frame PD array, and the 50% of every PD array or range is going to be a key level or a sensitive level. And you can see we hit the 50% and aggressively traded away. So now let me go down to the 15-minute. So here on the 15-minute, you project with standard deviations off of the manipulation move. So why was this the manipulation move? Well, this was the move that went down, took all of the buyers out of the market, and tripped people short. So this was the manipulation move here. We take out the sell side liquidity, we hit our higher time frame PD array, and then when we close back above here, this was the market structure shift. So there is where you project off of. 2 to 2.5 standard deviations just so happens to be that buy side liquidity, these equal highs that we engineered up. And 2 to 2.5 is where you'll see either that first reversal point or reaccumulation in second stage distribution. So let's look what happened today. So we moved up, didn't break above 2.5. We get the reaccumulation and second stage distribution higher. We didn't quite make it to 3.5 to 4. We stopped at the consequent encroachment of that weekly order block that I was talking about. It's going to be a key level, but I still think we're going to end up delivering higher. We have that buy side liquidity sitting here and here, these equal highs at 4 standard deviations. So I'm liking the move higher. So like I said, we need the moves above this weekly order block. So I had entered my position here when we were delivering out of this 15-minute FVG. I waited till after FOMC, and once we got the reaccumulation here, that's where I entered, and that's where I posted on Twitter the pictures of the standard deviations and what I was projecting Tesla to do. All right, so I hope this helps explain what I was thinking and why there was such an explosive move to the upside that happened on Tesla. I hope this video helps. Have a good one.